please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV18. I'm Ekta Batra. With me is Prashant Nair, and it's turning out to be a session where at least the Nifty and the Sensex are showing some amount of an improvement, so up around 0.4 and 0.5% or 0.5% respectively at this point in time. But the mid cap still pressured down around 0.3% with an advance decline ratio, however, which is currently holding on the advances side. Lot of stocks to discuss today. The likes of Tata Motors stands out, Jet Airways stands out because of the kind of disappointment we've seen. Emphasis on the back of a weaker rupee and something like a Sun Pharma ahead of its numbers tomorrow. City Union Bank numbers on your screen. Gross NPA largely maintained on a Q-on-Q basis. In fact, a marginal improvement. Hi, Prashant.
Ekta, hi. And we'll have the City Union management later on the channel. But for now, as you said, it's a bit of a move that we're seeing on the Nifty. 37 points, 10,467. But neither here nor there, still under the 10,500 mark. Let's get some opinion in then. Sudarshan Sukhani is with us from S2analytics.com. Sudarshan, thanks very much. Good morning. Do you think we recover past 10,500? That still remains a pivotal mark?
Yeah, good morning. The answer is yes. Yesterday we saw what could be termed as an exhaustion day. The markets were flat and they suddenly started falling for no reason or just tumbling one after the other. Supports were broken. That sometimes suggests that all the sellers have sold and now really they are exhausted in selling. That's exactly what's happening today. We went down, tested those lows and are bouncing back. So the short-term low may well be in place. Short traders should be closing their short positions and actually slowly going long in the Bank Nifty and the Nifty both. Now this is a rally in what is an ongoing downtrend, but we have seen we had a rally from 10,000 to 10,900. So these rallies are actionable and tradable. Just buy it and then see where it goes.
Rally in an ongoing downtrend, and that downtrend is within an ongoing uptrend. Is that the right way to describe this?
That's very, that gets very confusing. We'll just keep it at two levels.
Yeah.
Okay.
Like, I think somebody in the office that they pointed out, I mean, of course, completely different, I think it was about something else I don't recall, but it said Inception. It's like dream within a dream. But we'll keep it to two levels. As
it's like a roller coaster. But nonetheless, Sudarshan, stocks?
Well then, IT is doing well. Mid-cap IT, large-cap IT, both. And TCS is a buying opportunity. In fact, you see how the two large-cap IT stocks, TCS and Infi, are on the verge of lifetime new highs in this market. That's good news. So when we have a sense that the Nifty is cheerful, we want to buy strong stocks. So I would suggest buying TCS. I would also suggest buying Kotak Bank. I think private sector banks have a bounce in the next few days and Kotak could lead that bounce. So two buying ideas. And Canfin Home, that is a short sell. NBFCs, especially housing finance companies, are in a mess. They're in some kind of a major bear market. So one short, but the thrust should be, the focus should be on the buying today.
All right. Well, Sudarshan, we have a couple of Twitter queries for you now. Anoop wants to know if Vedanta is a good buy at the current price levels that we've seen.
Well, Ekta, what do you think? All right, I'll answer that. It's so, I think it's so much news driven and the chart suggests that there is a distribution, it's likely to fall lower. Why would you want to go and buy a stock that's in the middle of news, that's distributing, that's suggesting lower? It's a blue chip, but this is not a good time to buy. There is a pattern target of 220 on the downside and wait patiently for the decline to come to an end, for the news to be over. Don't buy now.
Okay. All right, Sudarshan. So that's the call coming in on Vedanta, that don't buy it now. A lot of news flow attached to it currently. Otherwise, now let's get in some more F&O calls. We have Shubham Agarwal joining in at QAPP Securities from QAPP Securities. Shubham, over to you then. F&O strategies for today.
Hi, good morning, Ekta. So I'll start with Nifty first. A couple of development to be noted over here. Nifty did breach the 10,500 mark yesterday, but if you look at the OI development that is happening today, 10,500, 10,400 put writers have become very aggressive, and they've started taking a trade on selling in the money put, which is clearly indicating that the market participants are expecting a bounce from here, and that could be really steep. So with that view, the first strategy would be a buy on Nifty. So it's a very simple one. We just have to buy a call option of 10,500. The target for the same would be 100, and the stop loss can be maintained at 10 rupees. The second strategy would be in Bank Nifty. So if you look at the Bank Nifty for the past 2-3 days, it has been relatively outperforming. And technically also we do see a kind of a bottoming out pattern that is getting formed in Bank Nifty. So I think a bull call spread is something that would be preferred. The reason is that, at the end of the expiry, normally the theta decay is very, very steep. So that's why we are not taking a naked call there and converting it into a bull call spread. The trade would be to buy a 25,800 call option and sell a 26,000 call option. And that is for the next expiry, that's 31st May. The target profit would be 4,800 and the stop loss can be maintained at 1,500 at a strategy level. And the third strategy would be again on TCS. As Sudarshan was also talking about TCS, we do feel that, IT sector will do really great from here. And Infosys has already seen a breakout. TCS did see a breakout on Monday, and it entered a pullback mode, and now again it is preparing for a up move. So with that view, a bull call spread can be deployed on TCS. The trade would be to buy 3,600 call option and sell 3,700 call option. On a strategy level, the target would be 9,000 rupees and the stop loss would be 3,500 rupees.
All right, thanks very much. Appreciate you joining in with those trades. Just before we slip into a break with some opinion, just want to highlight two names. One is Eros Media, which is up some 15.5%. It will come up 137 on the stock. And the other is Kaveri Seeds, where we had a prominent investor buying in 500 plus back on Kaveri. That's up 6.25%. Just Dial continues its move up about 3.6, 3.7, 454 or so on Just Dial. On the way down, I mean the big ones with large volumes, Jet Airways, some of these have been down since we started. Tata Motors is down 6%. So Jet, Tata Motors, PC Jewelers had a pretty large day yesterday. On the upside, it's giving back 6%. Jain Irrigation, Motherson Sumi. Motherson was down 5 yesterday. It's down another 5 today. And Godrej Industries is down about 4.25% as well. So this is the highest, the biggest volume on both on the upside and the downside, and the stocks which are moving. We'll take a very quick break here, but we leave you with some opinion. Emerging market specialist Bryony Dodgers, I hope I got the pronunciation right, of Aviva Investors, in conversation with Udayan Mukherjee as part of the London Eye series. Her opinion is that growth dynamics seen in India and China, coupled with strong economic fundamentals, look good for emerging markets. Listen in.
I think the long-term fundamental argument for emerging markets is most definitely intact. We are in a period of volatility, extreme volatility. The US dollar is strengthening on growth that is coming through, but coming through in line with expectations. You saw the US Treasury yield spike through 3% on retail sales numbers, which were in line with expectation. This obviously is a headwind to emerging markets. India, China, the two biggest emerging markets, have a combined population of 3.7 million people, most of which are young income earners. You've got this emerging middle class that is coming through. They're growing richer. They want to spend. Those growth dynamics, coupled with the stronger economic fundamentals, look good for emerging markets.
So the markets right there, no real change. So 43 points higher, 10,473. When we started, we had about 37 points on the index. So it continues. I mean, a little bit of buying coming, as you can see in the last couple of candles. The big story, talking point globally, has been what's been happening with emerging market currencies. We have the dollar, which is resurgent again. What's going on? I mean, are these very idiosyncratic country-specific issues which are pulling down each of these emerging market currencies, or is there anything broader which is underway? We've got some opinion now. So Nizam Idris of Macquarie now joins us on the phone line on this. Nizam, thanks very much. Appreciate you being with us here. So, I mean, just that question. Is there a common thread here, apart from the dollar's strength? And would you compare this to an EM scare in that sense?
Yeah, well, there is some semblance to 1994 when the Fed was hiking rates very aggressively. If you recall, in 1994, the Fed hiked 300 basis points actually over a period of 12 months. And in the process, the dollar strengthened, yields rose. And what it did was it triggered the Asian, well, at first the Latin American crisis in 1995, and then the Asian crisis in 1997. So there's some semblance of that. U.S. rates are rising, cost of funds globally are increasing, and when you put that on economies like India, who's facing a twin deficit of fiscal and current account, then the cost of funding those deficits would increase. And in the process, there will be pressure on the currency. So we are seeing some semblance of that pressure right now globally.
Okay, that point's taken, Nizam. Just talking about the rupee specifically, we've already depreciated around 6.5% year to date. How much more do you expect on the rupee? What is your specific target with a timeline?
Yeah, we are talking about 70 on the dollar rupee over the next 3 to 6 months. The move has actually been a lot faster than we anticipated towards that 70 level. Now, why are we talking about 70? It is not just about that global pressure on higher cost of funds, but also in India specifically, we do have issues like, environment where current account deficit is rising under the pressure of higher oil price. And we are also thinking, that in India, there will be pressure on the bonds market as well as yields globally were to rise. So a combination of all these plus, what we think is a macroeconomy that is not accelerating fast enough would all put additional pressure on the rupee. So globally, we dislike currencies like Indian rupee, Indonesian rupiah, Turkish lira, Brazilian real. Most of the other currencies have moved alongside the Indian rupee as well. So it is not that big a surprise, to be honest.
Nizam, the issue of how much the Fed will hike is still a matter of study and deliberation, right? Increasingly there is evidence that global growth is starting to peter out. We had European PMI, for example, yesterday. And there is a wide array of economists who believe that we'll hit a peak this year in terms of global growth and then trail off. So this, the currency market is telling us there is US and there is everything outside the US in a way. Will that hold, through the course of the year? Or as evidence emerges that growth in the US is also starting to come off, it won't be as strong. Maybe we won't get those strong, very, very strong Fed hikes.
Yes, so in the event that the U.S. growth were to fade and the pressure on the Fed to hike rapidly or to go away, then I guess then you would get back to a situation where market would associate with the Goldilocks situation, where there's some growth but not fast enough to trigger significant inflation and no significant need or urgent need to hike interest rate. But you must also remember that this is happening at a time when oil price is quite resilient. It's been rising and it hit $80 recently. So you need to balance that out as well, not just the macro, but also a high oil price.
Okay. Nizam, before we let you go, we've seen the Turkish Central Bank step in and hike rates by 300 basis points overnight and basing besides the currency. But specifically for India, what do you expect the Reserve Bank of India come June as well as for the remaining part of the year based on what we're seeing?
I think it's relevant only because it also reflects the pressure on emerging market currencies. But we do not expect the pressure to be similar to what we have seen in Argentina and Turkey. I think these two economies are probably different from the rest of the developing economies, even including India. So for India, I think RBI would need to hike interest rate. Bank Indonesia hiked interest rate last week. Philippine Central Bank also hiked interest rate a couple of weeks ago. Now, for us, we had a view that the RBI will hike interest rate next year. Originally, we have pushed that forward into the third quarter of this year. So we do expect the RBI to hike probably in August.
Okay. All right, Nizam, we're going to leave it on that note. Thanks very much for joining in and talking to us. So that's the view coming in from Macquarie on the currency space, that we could probably see 70 on the dollar. That's their target for the rupee in the next couple of months. But Manisha Gupta joins in to discuss what else she's tracking in the commodity as well as the currency space. Manisha?
Well, there's so much happening, Ekta, isn't it? Whether it's currency or the crude oil prices. But I actually want to take your attention to the sugar prices, where we still continue to hear a lot of political noises on. Remember, the last couple of days have been good on the sugar prices, but today yet again you have seen a decline come in because the market does not want to buy at higher prices. There is awareness about how much sugar glut there is in the country, so the buying has stopped, and that's led to a bit of a price decline as well. Having said that, there are a couple of important events coming in into the market there. One, of course, is about the ministerial meeting on sugar exports that is expected tomorrow. This is happening between the Commerce Ministry, the DGFT and the other ministries as well. They are going to sit out and discuss the issues relating to exports. Also, with the domestic sugar prices now holding proper, how much will it make sense to export? The mandatory 2 million tons is what is going to be discussed tomorrow. Apart from that, well, a cabinet meeting yesterday has come and gone, but now the next cabinet meeting is only on 30th of May, and that is when the markets will watch out for. Remember, there have been a lot of government cabinet note proposals. One, of course, is about creating a buffer stock of 3 million tons. Other is under minimum indicative export quantity. 2 million ton is what the government already has put out. The fixing of minimum sugar price at 30 rupees per kg is what is put out in that cabinet note proposal. And the important point is that the floor prices of these will be linked to the release mechanism so that every mill gets an equal opportunity to sell its sugar. So a lot of proposals out on the paper when it comes to sugar, but we still have to see how much of that actually goes through. Navneet Damani of Motilal Oswal now joins us to talk more about that. Navneet, hi. What is your sense really coming in for sugar? There is plenty happening, but yet much of that is yet to actually yield any results.
Well, sugar prices have been very volatile over the last 1.5 years. From about 20-22 rupees on the domestic front, they have reached a high of about 40-44 rupees, and now back to around 30 rupees. As you mentioned, there is a proposal to put a cap or probably put a base price to sugar prices at 30 rupees. But if at all that take place, then it will be beneficial for the millers, and it will be very comforting for them, but it will have a very significant impact on the domestic kitty of the government, because they will have to kind of fix an MRP or MSP for sugar also, which is not the case at the moment. There is a MSP on sugar cane but not on sugar at the moment. So if that happens, then it is not a very great sign, but that could be the need of the hour given the kind of volatility in the prices that we are seeing.
Well, absolutely. And while, of course, there are short-term measures, long-term measures as well are being asked by the sugar industry. But Navneet, also, how are you looking at the currency market action with rupee almost down 7% in this year until time, with 70 being touted out? How are the rupee futures doing, and is there a trade really coming in for this one?
Well, rupee futures have been following the spot market very actively, and we've seen about 7.5% depreciation. I guess much of it has been spoken by the previous speaker about rupee, that what could be the next target, and we've seen massive depreciation coming in, and there is no kind of respite even as crude oil prices have been stabling around 80 levels on the Brent front, and equity markets outflow continues to be very severe. Debt market outflow also has been severe. It is around 5.5 billion over the last 2 months. So if that is the kind of flows that we are into, it will not be a surprise if we surprise 69 levels in the very short term.
A very quick last word on the crude oil prices. With the profit taking that we've seen come in on this one, what are you putting out as strategy?
Well, I guess most of the bad news for crude oil at the moment is timing, and the rally is a little overstretched at the moment. Over the last couple of weeks, we've seen that inventories, which were a discomforting factor, has now been very positive, and 2 weeks of successive build-up of inventories also witnessed with a very huge number of 5.2 billion barrels. So I think crude oil should stabilize around 60. However, I do not expect prices to crack down significantly, but at least for the time being, a major upside is already built into the prices.
Okay, all right, Manisha. Thanks very much for joining in and bringing us all of that perspective in the commodity space. We need to take a break now, but up next, we'll be talking to the management of rupee